Let's test how this works in the real market. So I'm opening a trade for $1,000 with a 5-minute duration. The channels are quite slow moving, so it's better to have some extra time. This is the essence of a channel. The price moves back and forth within it until it breaks out. Yes, it's still not available for trading. It would have been great to enter a long position. Parallel channels are an underrated pattern of technical analysis. When used with instruments for analyzing exchange volumes, parallel channels can become the basis for developing an effective trading strategy. Hey guys, my name is Mary and I have been involved in trading for quite a while to share my knowledge with someone else. That's why I created this YouTube channel. If you want to participate in trading sessions with me and receive signals from me, then subscribe to my Telegram channel. The link is in the description. What parallel channels are? A parallel channel is a technical analysis pattern in which the price forms a trend channel and then breaks through one of the boundaries to find the next boundary marked with a red circle in this diagram. This provides a condition for creating a parallel channel. To draw a parallel channel line for a bullish trend, you need to create the initial channel. Measure the width of the initial channel, draw a parallel line below the initial channel at a distance of the channel's width. Technical analysts may expect the line to serve as the new support from which the bulls will try to resume the uptrend. The parallel channel pattern for a bearish trend works similarly, but in a mirror image. Why the pattern work? The parallel channel pattern is similar in its nature to the 50% retracement. In both cases, there is a proportional correction of the price dynamics within the global trend. Hypotheses about the efficiency of both patterns also conclude the fact that they are affected by Fibonacci proportions. The market equally reduces the opportunity to earn both trend traders and counter-trend traders. Trading psychology and price perception have an impact. In addition to assumptions about the reasons for the parallel channel's effectiveness, we're going to give examples on historical charts. They will definitely convince you to pay attention to this technical analysis pattern. The first example is the dynamics of the S&P 500 in 2018. Throughout the year, it was between the initial channel lines 1 and 2. However, a bearish breakout occurred at the end of the year. On December 24th, the SPX made a low which probably killed the Christmas mood for traders. At the same time, the parallel channel line quite clearly indicated the level of a quick reversal on the daily chart. One could use lower intraday timeframes to get confirmation and enter a risky position with a small volume. It had a chance to become the best trade of the year. The same SPX index, but on the larger scale, another candidate for trade of the year or even more. If you draw the main channel through the extremes of 2014 to 2020, the parallel channel line will indicate that the bottom of the panic caused by the spread of the coronavirus. While the rest of the world was terrified, the parallel channel helped cold-blooded investors choose the accurate entry point. Advantages and disadvantages. Like many other technical analysis patterns, the parallel channel has its advantages and disadvantages. As for advantages, it is easily formed. You can enter a position at the beginning of a trend impulse. Examples are found in all markets, timeframes, reference points for calculating target, and a stop loss. As for disadvantages, the price does not always break through the trend channel in order to test the parallel channel line. There is no guarantee that the trend will resume. A setup for a rebound from the parallel channel line may mean counter-trend trading, which carries additional risks, subjectively in the drawing of initial channel lines. It is impossible to completely eliminate risks when trading parallel channels, or any other patterns, but they can be significantly reduced by using professional instruments for analyzing exchange trading. Try to use the following trading plan as a basis. Find a trending market, draw a trend channel, wait for its breakout, correct the channel contours if necessary, draw a parallel channel line, wait for the price to reach the parallel channel line, get confirmation that the price is reversing from the parallel channel line, enter a position with a preset target and stop loss levels. Channels can be utilized as entry patterns to continue the established trend within a trend-following strategy. A channel is formed when price movement is confined between two parallel sloping lines and the price reaches these lines at least twice. An ascending channel indicates a bullish trend, with the support line connecting consecutive higher lows and the resistance line connecting consecutive higher highs. A descending channel indicates a bearish trend, with the support line connecting consecutive lower lows and the resistance line connecting consecutive lower highs. The support line of the ascending channel serves as a buying zone, while the resistance line of the descending channel serves as a selling zone, and the opposite lines act as profit-taking zones. The overall stop level is placed on the opposite side of the buying or selling zone. Conservative traders may seek additional confirmations before entering a trade. TradingView offers a convenient drawing tool for users to visually identify channels on the chart. Let's test how this works in the real market. This is the USD and Canadian dollar currency pair, and the channel I'm interested in has already formed. I'll draw it now. Now, its starting point is a bit further back. I need to extend the line. There we go. Almost a perfect channel, if it weren't for the breakout from the top, after which the price returned within the boundaries. But I won't pay much attention to it. The price is currently near the upper boundary, indicating a potential trade opportunity on the downside. So I'm opening a trade for $1,000 with a 5-minute duration. The channels are quite slow moving, so it's better to have some extra time. Now let's observe how the price moves within the channel. Everything seems to be as it should be. The price zigzags up and down, meaning it moves from the upper channel boundary to the lower channel boundary and back again. This is the essence of a channel. The price moves back and forth within it until it breaks out. Sometimes fake breakouts occur, like the one we saw on the chart a few minutes ago. However, that specific candle had a very long wick, indicating it was a fake breakout. Moreover, the candle resembled a hammer signaling an imminent trend reversal, suggesting that the price will soon start to decline. In general, there are clear bounce points both at the lower and the upper boundaries of the channel. Throughout this period, the price has been bouncing off these boundaries effectively and swiftly. By the way, another factor favoring a price decrease is that it encountered a resistance zone. Everything points towards a downward movement. Let me show you another situation with the British pound against the US dollar. Well, it's another channel here as well. Unfortunately, this currency pair is currently closed for trading. Yes, it's still not available for trading. It would have been great to enter a long position here. By the way, the euro against the British pound has also formed a channel. Yes, the price is also moving within a channel here, and we can open a short position. I'm very confident in this strategy, so I'll place a second trade without any overlap or restrictions. So this is euro and Great British pound, and I'm opening a $1,000 short position for 5 minutes. As you might have noticed, similar to the previous situation, the price constantly moves from the upper boundary to the lower one. It bounces off the lower boundary and heads up, then bounces off the upper boundary and goes down. This continues until something significant happens. This is a straightforward strategy. The key is to identify the channel in time. Now try to calculate how many profitable trades you could have made here by simply buying and selling at the boundaries. I can roughly see around 10, but in reality there are more. Oh, for some reason USD and Canadian dollar is going up. Nevertheless, I expect the price to start falling and that whales are accumulating liquidity. 2 consecutive fake breakouts sometimes occur, and even if not, it's still fine. If the market always worked as in the textbooks, everyone would be millionaires, wouldn't they? So such things happen occasionally. Now, the price is at a point where I want to open another $2,000 short trade. I am really confident that the price will decline. I'm certain it will return to the channel, but as I mentioned, it's better to have some extra time, and I didn't have that luxury here. So overlapping trade will allow this situation to work as intended. We have around 4 minutes left, so let's wait. Well, the situation with the euro and British pound currency pair is playing out as expected. The price traded slightly higher, but now, with a strong impulse, it's returning to the channel, bringing me profits. There are about 12 seconds left. Now it's definitely closing in positive direction. I can't imagine what could have happened for the price to suddenly go up. The last 4 seconds, and there we go. Done. I earned $920 from this trade. Now let's wait for USD and Canadian dollar. There we go. The trade is about to close with a profit. I made around 1,000 net profit despite one losing trade. As you can see, trading within the channel works. To start parallel channel trading, you can use the following algorithm. Draw the main channel, draw a parallel line, wait for the breakout of the main channel and the test of the parallel channel line. Examine the readings of the ATS indicators to make sure that the line of the parallel channel gives reason to enter a position. Enter a position and control the risks. The price rebound from the line 3 at the panic low and a spike in positive delta confirm the activation of buyers. Parallel channels are not the holy grail. Do not expect 100 profitable trades. Your job is to keep the odds on your side. I appreciate your time and interest in watching this video. If you found it enjoyable, I would greatly appreciate your support by giving it a thumbs up. I also encourage you to subscribe to my YouTube channel and join my Telegram channel to stay informed about my future content. By becoming a part of our community, we can build a friendship and have more discussions. Thank you for your support. Goodbye.